Welcome back to our YouTube channel, The Book Digest. In today's episode, we're diving into a powerful and practical summary of Beating the Street by Peter Lynch. It's a book built on a really simple but kind of radical idea, that your everyday experience can be your single greatest advantage in investing. And believe me, it all kicks off with one of the wildest investment stories you'll ever hear.
So this story, it kicks off in, of all places, a 7th grade classroom at St. Agnes School in Massachusetts. A bunch of students with absolutely zero financial background were given a pretty straightforward assignment: build a stock portfolio. We're not talking fancy software or calls with Wall Street analysts, just their own observations. So you gotta wonder, how'd they do?
Okay, get this. Over 2 years, their portfolio returned a staggering 70%. Yep, you heard that right. Not a typo. 70%. That is a return that most seasoned pros on Wall Street can only dream about. But to really grasp how incredible that is, we need some context.
Now, to really put that into perspective, over that exact same period, the S&P 500, the benchmark for the entire U.S. stock market, it was up just 26%. So these kids didn't just beat the market, they absolutely crushed it, more than doubling its return. So what was their secret? How on earth did they pull it off? Well, their secret weapon wasn't some fancy algorithm or a hot stock tip from an insider. Nope. It was something so simple. They just invested in companies they actually knew and used in their own lives. They loved Disney movies, so hey, they bought Disney stock. They all wore Nike sneakers, so they bought Nike. They shopped at the Gap, so they bought the Gap. They just trusted what they saw every day.
And that right there, that's the heart of Peter Lynch's whole philosophy. He argues that you, the everyday amateur investor, actually have a huge advantage. Just by paying attention to the products you use, the restaurants you love, and the stores that always seem to be packed, you can spot these amazing companies long before the experts on Wall Street ever do.
Okay, so finding a great company is one thing, right? But Lynch says that's really just the beginning. He argues that the single biggest factor in your success as an investor, it's not what you think. It's not your IQ or how good you are with spreadsheets. It's something much more primal.
I mean, this is probably one of the most famous quotes in all of investing, and for a really good reason. What Lynch is getting at here is that being a genius will only take you so far. The real battle, it's all psychological. It's all about how you handle the pressure when things get scary.
So, what does he actually mean by the stomach? Well, it's that grit, that emotional discipline, to just stick to your guns when the whole market is freaking out. It's having the guts to ride out the downturns because you trust the homework you did in the first place. For Lynch, this kind of emotional strength is way more important than just being book smart.
All right, so you found a company you know and love, and you've worked on strengthening your stomach for the ride. So what's next? You'll be surprised at how straightforward his research process was. He approached it less like a Wall Street numbers cruncher and more like a curious, investigative reporter just trying to get the real story.
Yeah, Lynch's whole thing was about getting out from behind the computer screen. Sure, he'd read the annual reports, that's step one, but then he'd go straight to the source. He'd talk to management, he'd visit the company headquarters, walk the store floors. He wanted to see for himself if the story they were telling on paper was actually true in the real world. And only then would he dive into the most important part: the financials.
And when it came to that balance sheet, he had this fantastic, simple rule of thumb. He looked for companies with at least twice as much equity, the stuff it owns, as debt, which is what it owes. And why is that so important? Because debt is the thing that can turn a temporary slump into a total disaster. A strong balance sheet is like a company's survival kit for tough times.
Now, Lynch doesn't just stop at how to pick stocks. He makes this incredibly powerful, data-backed case for why you should own them in the first place, especially when you compare them to so-called safe investments like bonds. And the numbers he lays out, honestly, they are just eye-popping.
All right, let's play this out. Imagine you took $100,000 and put it into long-term government bonds. Over 60 years, that turns into about $1.6 million. Hey, not bad, right? Respectable. But what if you'd put that same $100,000 into the S&P 500 stock index instead? Well, hold on to your hat, because it would have ballooned to an incredible $25.5 million. That's not just a small difference, folks. That's a life-changing difference.
And here's the bottom line, the fundamental difference. When you own a stock, you own a piece of a growing business. You get to share in its success. But when you own a bond, you're really just lending out your money, and your return gets slowly eaten away by inflation over time.
So for Lynch, if you're serious about building long-term wealth, stocks are the engine that gets you there. Period.
So, okay, this is all great theory, but how do we actually put it into practice? Well, Lynch distills all his years of incredible success down into a really practical set of rules for managing your own portfolio. These are the absolute key takeaways.
First off, know what you own and why you own it. No investing on a whim or a hot tip. Second, be honest with yourself. Only own as many stocks as you can genuinely keep track of. It's about quality, not quantity. Next, you have to regularly review your stocks. Ask yourself, is the original reason I bought this still true? Also, make sure you diversify across different kinds of companies. And probably most important of all, think like a business owner, not a gambler. You're in this for the long haul.
And that really brings us full circle to the final, most important question that Lynch wants us all to ask ourselves. It forces you to really look in the mirror at how you behave. When the market inevitably takes a nosedive, who takes over? Is it your calm, rational head, the part that remembers all the research you did? Or is it your panicky stomach, screaming at you to just sell everything and run for the hills? Answering that question honestly, well, that's your first real step to beating the street.